We're going to do a quick video here real quick on gold price prediction, and we're looking at the gold futures contract here, GC. This is traded on the COMEX exchange, and this is a one-day chart. We have three moving averages on here. We have a 5-day in green, a 20-day in red, and a 200-day in blue. And we've scooted back here about March 2020. We see we bounced off the 200-day moving average, came up here and made a high around the almost the 2100 area for gold, and that would be per ounce. And then you come back down here, and we first, when the 200-day is rallying, we see that we get a test of the 200-day moving average, but the 200-day is still in an uptrend, and we get a bounce off of it. But then we get a significant close below it, and we start our first little bear market. We see that the price of gold respected the 20-day moving average all the way down to the 1680 area. We put in a bottom and a test of the bottom, and came back up and respected the 20-day moving average all the way up until we got some decent closes up to the 1920 area here above the 200-day moving average. And that's when essentially this price went sideways. If we pull out right here in the middle, this price is basically oscillating around 1800 from about June, third week in June, to about February, third week in June of 2021, till about January, February of 2022. We then saw, as you can see, that it oscillated across back and forth, right on hugging what became a declining 200-day moving average, and then we saw this big spike. Now, there's a whole lot of reasons we could have got this spike in gold here. Could be some fundamental data coming out here on interest rates and so forth, or belief that the Fed will begin to tighten, but it doesn't really matter. We got a spike up here. We attempted to make new highs. We did make a marginal new high here at 20,078, or just barely made it. Let's take a look. Looks like we did make some new highs here. Actually, we did not. Have to take a look and see. It looks like we didn't make new highs here, and then that really should be the beginning of a bear market. It's hard to really call this a significant bear market, even though we're getting tremendous price declines, because the 200-day moving average is still flat. But we went up here, we failed to make new highs, and we saw this subsequent sell-off. Let's expand this a little bit. We can see that we had distribution right here between roughly March 10th and April 22nd. Roughly that period was just distribution, where people were traders were saying, hey, this price is not going any higher. So this was distribution, getting out of their long positions, and they're beginning to get in their short positions here. You can see the 20-day was clearly in a downtrend, but this is very interesting at the green 5-day moving average. Look how straight that was, and straight down. So this was a phenomenal trade here from roughly this area where you had the 5-day cross over the 20-day about 1930 all the way down here to the 1700s. That was a great, not really a bear market, but just a great downtrend, a classic 520 crossover downtrend for gold. You see here we're still hugging the 200-day moving average, and then again, as the 20 rolled over and crossed below, significantly down below the 200, even though the 200 is still flat, which is not a good indicator that this is going to be a bear market, you can see prices fell right down, and your 5-day moving average just looked beautifully straight. And when I say straight, I mean there's not a lot of back and forth in the 5-day. This is just a serious down trend and a classic crossover to the downside on a 5 and 20 moving average crossover system. So we got down here at 1680 roughly, put in a bottom, and as you can see, because we're not in a significant clear delineated bear market, we got a good strong rally up with a gap here at about 1738 to about 1750, and we approached and tested the 1830 range, 1825 range for kind of a rough test of the 200-day moving average. You can see this week we went up, we tested it, and looks like we're beginning to roll back down a little bit. My guess for this price, you're going to come down here in this range in early September at around the 16 to 1700 range, put in a bottom here and test. If you don't stop at that point, then this market's probably going to go into a bear market for gold. I don't see that happening, but that's probably what you're going to get. Most likely what's going to happen with this straight 200-day moving average, you're probably going to trade back and forth in this range somewhere between 1700 and 1825-ish in this area here, probably for a few months. That would be my guess. That's obviously opinion only, my opinion only, and for entertainment purposes only, but that's my guess. I don't see this collapsing much below this price. At least I don't see it right now, nor do I see we getting a tremendous rally in gold. Probably a trader's market, probably for the next, let's call it until the end of October-ish. A trader's market back and forth, as I said, between 17 and 1800 is my best guess. Let's go down and see what RBAM Research says about it. RBAM Research says algorithmically generated prices every day before 7 a.m. These are coming out tomorrow on the 22nd. I'm doing this Sunday the 21st. You can see these are gold futures. The ticker for the COMEX exchange is GC, and we have 1 day, 2, 5, 10, and 20-day holds. It's indicating buys. It'll either be a buy or a short each morning before 7 a.m. Monday through Friday. And for tomorrow, it's indicating for entertainment purposes only. A 1 day hold trade, you buy Monday, close out before end of trade Tuesday at 1746. A 2 day trading days, these are not calendar days, trading day hold at this price, 5 day, 10, and 20 days, and so forth. This higher win percentage is just what it says. If the market trades through this, you could consider, if your own research validates it, taking a position at roughly these prices, and you'd have a higher chance of making a profit than you do with these lower ones, although they're all back tested pretty good. Keep in mind, all for entertainment purposes only, and you trade at your own risk. You've got to use your own analysis. These are just for entertainment purposes. Some days we'll get shorts. Tomorrow we have some long positions here for your review. You can get all of these absolutely free, no credit card required, before 7 a.m. Monday through Friday at rbamresearch.com. There's a link below in the description. That's rbamresearch.com. We cover 190 stocks, the major forex pairs, BTC crypto, and the futures contracts, as I just showed you, the gold. We also cover the S&Ps, the crude, and the T-bonds as well from the futures markets. You can get them all, again, with no credit card required. Just go to the rbamresearch.com website and sign up. If you like this video, please click the like button. If you want to subscribe to this video, please do that. If you have a comment on how to make this video and our future videos better, please leave them in the comments section. Keep in mind, everything that you've heard is for entertainment purposes only. It's all opinion, including the entry prices, and you definitely trade at your own risk.